People don't like uncertainty, but markets, they hate uncertainty. What it needs is some information and leadership to rely on it. That may sound political, but it's very much economic. The gains of our economy these past 3 years have largely been built on consumer spending, which requires consumer confidence, which requires certainty or at least the illusion of it. Instead, we see businesses unsure about the numbers of tests and cases and unsure about governmental plans to deal with the crisis. And you see businesses trying to minimize risk and operate out of a superabundance of caution. So that's what's happening in the markets. And how do we fix this is the question that everyone has. Back in 2008, to stem the tide, we saw the Fed cut rates, and that stimulates consumer spending. And the Fed did just cut another 0.5%, but that set of tools might not work here. A rate cut won't get people spending money when workers just don't know if they'll have paid sick leave or any government help to bounce back after what's sure to be lost wages. Just minutes ago, President Trump did float the possibility of a payroll tax cut, but the details and faith in his word will be key. Until then, investors and businesses are pricing in this lack of consumer confidence, and that's why we're seeing this anxious market at the moment. The virus's next moves will shape the 2020 election in energy-dependent states like Texas. It maybe already has. With us now to discuss the economic impact of COVID-19 in further detail is Cory Chapman, financial planner and managing partner of EFC Wealth Management. Cory, thanks for coming on short notice. Everything is really fluid. It's a wild situation, but I know your number one requested here is for everyone not to panic, right?
Yeah, you got it right. You know, I think at the end of the day, most people are panicking, and unfortunately, there's no need to at this point in time. If you plan properly, you've sat down with your advisor, and you kind of manage what your goals were, then you're going to be well diversified in the process. So make sure you're not jumping the ship too soon because you're worried about something that could happen that hasn't necessarily happened at this point.
So let's say I'm a new client, I come into you, I'm going to pump you some free advice here, but hopefully it's an advertisement for you moving forward. Where do I go with my money? Bond prices high, yields low, not oil stocks probably. Right. But what do I do in this moment?
Well, you know what? First, it's going to really depend on your time horizon, like when you're thinking about taking off and using this money. I always tell clients when they first walk in the office, let's look at it from 3 different buckets, if you might, and look at it from that standpoint. First, you want a short-term bucket that's going to have you deal with anything that you might need within the next year or so. Then you want to look at a second bucket that may be 2 to 5 years out. If you need that money in that time frame, we're looking for vehicles that we can put money into that will give you that opportunity. And then last, anything that's over 5 to 7 years and more. That's the way you want to structure your portfolio so you're well diversified. So when we have these turbulent times that we're looking at, we're not rushing to sell automatically because we're fearful about running out of money.
That's really good advice. I mean, when we think about what's happening now with the governmental response, we were talking about this Fed rate cut. We're also looking at, you know, just now President Trump gave a speech right now, so we're talking about a payroll tax cut and hopefully helping some of the workers who might have an issue with dealing with the fallout, like the gig workers, et cetera. Which of these things do you think would work, and if any?
You know, I think any help we can get from the government is always a good thing, but then we got to figure out how we can afford to pay for it when that happens. So I think right now what we should be focusing on is taking prudent decisions or making prudent decisions based off what the long-term approach might be. We don't know how this coronavirus will last and how it's going to affect the economy, so we just need to be patient about the process and figure out the best choice of action based off what our goals are and what we're trying to accomplish.
A lot of companies across the board were getting hit, but some weren't getting hit quite as badly today. Stocks like Netflix and certain kinds of companies people are already looking at like, hey, well, that's one to invest in right now because maybe in the self-quarantined age, that's a place to go. Are there any sectors like that you have your eye on?
You're looking more like utility stocks, you know, things that are utility stocks, something that's going to be a good safe haven to be into. You know, right now we're seeing some financials kind of pulling back a little bit, but it's a great opportunity to start looking at things long term. So things that you would normally use on a day-to-day basis.
Yeah. So with our last minute here, I mean, when we're looking ahead, you're someone who's reading the tea leaves a lot.
Sure.
If you put on your analyst cap here and you're looking which way the wind's blowing, what are the things that you're keying in on a day-to-day basis? What are you paying attention to see how this might develop?
Sure. I think at the end of the day, you know, there's some great buying opportunities right now. You know, things have kind of dropped lower than they have been. The good thing is we're probably about 10% down in the market, which means it's just a correction. We haven't got to what's called the bull market, or excuse me, the bear market, when we dropped about 20%. So this is a great time to start looking at stocks and seeing what their fundamentals are and thinking what might be a best buy to buy.
And you brought up that bear market before we go. When it does possibly hit that bear market, I mean, we're getting closer, obviously. The psychological effect of that is huge. What else is the practical impact of it being a bear market?
You know what? I think at the end of the day, for the most part, I think people are just panicking because they're just hearing what's going on in the news. I think the best thing they could do, unfortunately, but maybe is not watch the news as much, not panic as much. Because I think if you stop looking at the news, it doesn't give you that fear. I know when a lot of clients come on board and they say, hey, I haven't even looked at my account, that's probably the best thing you could do at this point in time, and let your financial advisor help weather the storm with you.
Okay, I want everyone at home to listen to everything that Cory said, except for not watching the news very much. Just keep looking at the news. Other than that, this man is gold. Thank you so much for your time.
Appreciate it,
Appreciate it, Cory.
Appreciate your
Thank
time.
you so much.